Okay, hello traders and welcome to our market update video here. And this is still not upon from the Master Markets Trades Conference and the Traders Open Day. Okay, so this is the end of this week, 15th of June 2018, and also for those of you football fans out there, it's also the kickoff of the World Cup, right? That was of yesterday. Right, so as of today, I'm just going to go through the markets, but before that, as we always do, we're going to go through just a small topic first, teach you all a little bit, and then look at our performance, what we've done for this week so far here at Vedanta Trading, okay, on our trading floor, Master the Markets. Right, so this was all called Forex Friday before, but of course now we've expanded onto other instruments as well. So we're looking at other instruments overall because that was a request from most people. So that's why we call this now Market Update. Now, the first topic for today, what we're going to be looking at is understanding spreads, stops, and limits. Okay, so spreads, okay, and stops and limits. Okay, so that's what I'm going to be taking a look at now. First of all, before I tackle the spread, let me talk about stop and limit orders, okay? So usually there's only two types of orders that most traders all around the world will be placing. Either it's a stop order, okay? Now do not confuse this with your stop loss, okay? This is totally different. We're only talking about orders over here. So either it can be a stop order or it can be a limit order, okay, right? This is the only way that you can enter the market or get out of the market. In fact, only to enter the market, this is the only way you can get out, you can get in, okay? Only through the stop or the limit. This is the only way to enter. Now let me explain. Now in terms of a stop order, let's just take the stop. A stop, by its definition, means something that is worse than the market price. Okay, worse than market price. Okay, worse than market price. Now a limit by definition means better than market price. Okay, better than market price. Now here's the critical thing that you must understand for you to understand this whole concept is that this worse than market price and better than market price is relative, okay? It's relative. Now let me explain this. What do I mean by this relativity? Now you see a stop order can either be a buy stop, right? Or it can be a sell stop. Yeah, these are the only two ways you can enter the market. Either through buying it, that means expecting it to go further up, just like this in the dollar Swiss example. And over here, or sell, that's what we call short. Explain this further in Traders Basecamp, and that is going further down. Okay, that's what we're doing over here. Okay, so that's what that is. Now, so your stop can either be a buy stop to enter the market or a sell stop to short the market as well. So two different types of entries, yeah? Then what do we then mean by worse than market price? This is where the relativity comes. Now, let's take a look at a buy stop order. Okay, a buy stop order. A buy stop order, if you're saying it's going to be worse than the market price, then does that mean it's got to be higher than the market price or lower than the market price? Okay, so what should that be? Let's think. Now, if you're a buyer and if you walk into an Apple store or Waitrose or like a travel agency like a Thomas Cook, if you want to buy, what do you usually look for? I mean, if the price of that laptop was £2,000, as a buyer, what is a better price for you? Or what is a worse price for you? Is a better price lower than that? Or is a worse price higher than that? Okay, that's what you ask yourself. So when I say that worse than a market price, imagine the market price of the laptop is £2,000. As a buyer, what would be a worse than market price for you? Higher than 2,000 or lower than 2,000? What would it be? Have a think. Okay, right. Now, I think most of you would have then naturally said that, of course, a worse than market price would be buying higher than that, right? We'll be buying higher than that. Why would I want to buy higher than that, right? So that's what you would have probably concluded. And that's right, you're right. So higher than the market price for a buy stop is worse. Yeah, is worse. So this would, for a buy stop, yeah, this is where the relativity comes. So a buy stop higher than the market price is what is called worse. Okay. Because think about this, right, traders? Now, take a look at a real life example. So a buy stop would be, let's say if you got, for example, in master markets here, we talk about primary setup, right? And then in the primary setup, you put a order on the top of this bar. But look, the market price is where the close price is it not? And if I put an order for the high of that bar, then I'm buying at a worse price. It's like I'm buying more than 2,000 pounds, is it not? So take a look at this example here, right? Current bar here. Look at the current price. This is the market price, 9971. If I now put an order for let's say 1.0000, right? $1 rather than 99 cents. Okay? Then what am I doing here just in relation to this example? I'm buying higher than the market price. If you buy higher than the market price, as a buyer, is worse for you, is it not? So it's called a buy stop. So how I will enter it into the broker platform to buy this position would be a buy stop. Okay, be a buy stop. Now, however, if I were to do now a sell, now okay, let's come to sell later on. But if I were to do a price, if I were to put in a price into the broker which is lower than that, 9971, right? Let's say I put a price here at 9978, let's say 9978, yeah, then that would be called a limit price, yeah, because it's better, isn't it, as a buyer for me? Yeah, it's better than for as a buyer. Now, however, if I now become a seller, okay, let's take a look at this then. If I become now a seller, that means I want to short the market, right? Then it would become the opposite, right? As a seller, if you bought something for 1,005, okay, 1,500 pounds, okay, if you were to sell it at a higher price, let's say at 2,000, higher than 2,000 or higher than 1,500, what would be better for you as a seller? Let's take a look at this example. If you bought something at 1,005, and if you sold it at a higher price, would it be a better price for you or a worse price for you? Yeah, if you sold it higher, then it's a better price if you bought it at 1,500. If you sold it lower than 1,500, if you bought it at 1,500 and sold it lower than 1,500, then it's a worse price for you, right? Worse price for you. So take a look at this example. If I put a short order here, primary setup again, right? Current market price is here. That means I'm not selling higher than the market price, right? I'm selling lower than the market price, isn't it? I'm selling lower than 1,500. So that would be a worse price for me. Okay, so that's why we call a sell stop. Now, if I were to sell higher than this, that means if I want to enter into the market using this, but I would still want to sell it. That means I'm thinking that it's going to go short. If I still want to sell it, then it's going to be a better price than the market price, isn't it? Because I'm selling higher than the market price. So that's how it becomes relative, right? For a buy stop, higher than the market price is worse. For a sell stop, as a seller, lower than the market price is worse because you are changing a position as a buyer or seller. The same thing for the limit, is it not, traders? As a buyer, if you were to buy lower than the market price, okay, lower than the market price, then it's better. For a seller, if you were to sell it higher than the market price, which makes more sense, then it's a better price, which is known as a limit, okay? So I believe that helps you understand this. The final part is the spreads, right? So makes you understand stop and limit. So follow through the step-by-step methodology that I taught you how to look into this and dissect it. And then finally the spreads. Now the spreads are always only added to the buy order. Okay, only to the buy order. Doesn't matter if it's a stop or a limit, but it's always added to the buy order. Okay. Now, just like this, for example, one critical thing what I want to tell you is whatever that you see on the chart, whatever that you see on the chart, is not the buy price, it's the sell price. Okay, right? Then you got to when you want to buy, you got to add the spread because this is 9965 at the moment. But if you want to buy it, this would be 2 pip spread for the broker. That's how he makes his commissions. So you got to buy at 9967. You can call it the cost price or the selling price, whatever it is. But whatever you term it as, 9965 is the sell price. The buy price, whenever you want to buy, yeah, a margin is added, or they call it the spread. So 2 pip spread is added, but always remember that the spread is always added to the buy price and is invisible on the chart. Okay, so you got to be careful of that when you put your orders in. Okay, so that's pretty much that from me. A very quick recap then on that is stop, worst price. Okay, limit is better price, and finally spreads are only added to the buy orders. Okay, right? Okay, cool. I guess that's good for that topic over there. Now let's move on to our performance for this week. Elite room, no trade so far. We did actually, I must admit, we did take a euro yen trade on a mistake on our cash. So that wasn't really good for us. But of course, I just want to relate to you all to tell you all that we're just like any other trader out there. We do make mistakes and we do get our rules sometimes wrong. We forget it. We don't because it's quite a bit of them. We got to go through thoroughly, and all those people who are on our elite rooms and our live trade mentorships will appreciate that. But hey, mistakes do happen. Every professional trader, institutional trader makes those mistakes, but it's fine. You move, you learn, and you move on. Now, in terms of the system, however, no trade so far on the elite room. However, on the live trading room, they did take a trade on dollar yen, right? That was at 0.75% profit, 55 pips of profit. It was closed. This was done in 2 days. Is what we got 10th of June and 12th of June. Okay. Now, in terms of liftoff, we got a really nice, beautiful trade going on. I guess some of you must have received that video on Aussie dollar. We have a nice chunky profit at the moment going on in terms of Aussie. So let's take a look on Aussie dollar at the moment. You can see that over here we had a nice, beautiful move. We did enter the particular trade on the close. This is what we call a primary setup. Stop loss on the high, and really nice, beautiful run that we are having at the moment. We're going for a 3-to-1 reward to risk ratio is what we are having. It's about 180 pips. I think we might be reaching that very shortly. Okay, if you were to look at the journal, I think there's about £1,090 floating profit at the moment is what we are having. Now, let me tell you, 7413 is where our target is. Let me just take a look at that. 7403, right? Yeah, it's pretty much around here, is it not? Let me just quickly just take a look at that. 7413. Yeah, so pretty much around here, right? So around here is where the target is. All right. Okay. I guess that's pretty much that from me in terms of the analysis. Now that's the market watch, right? Let's take a look at the market watch at the moment. Now, just a very quick overview of the market. What's the markets doing? What's the different markets doing? Bitcoin, I think we did analyze this. There was a big gap over here. I think some of you might have seen it. We are looking at some opportunities here, especially at these white lines here, to invest into long term. 5,000 and 2,900. Okay, is the levels we're looking at. So in terms of, I mean, if you want to trade it, I mean, downtrend at the moment, so you can take a look at that. This is a primary setup. I was telling our traders yesterday as well. It's the first primary that has happened at the moment over here. In terms of the let me just take a look at that. There was a prime over there, and this is, yeah. So it didn't really qualify, I think, because of our rules. But in any case, yeah, so that's prime profit setup over there. If you want to take it further short, trend is down, is what we're looking at. FTSE 100 is continuing on. It's actually in a SMC at the moment, single market compression, no real trend at the moment. See if it breaks this level or not at 7573 to resume its trend. Oil, counter trend, downtrend as well. You can take a look at different opportunities based on your rule parameters. Dollar, currently trend is up. It's in a consolidation phase over here, as far as we can see. Okay, that's what we are having at the moment. Now, in terms of the Dow, it's having quite a strong fall at the moment. As what we're seeing is a counter trend move at the moment, but the trend is up at the moment. Okay. However, I must do pinpoint to you that if you were to take a look in terms of the Dow Jones on the weekly, is what I want to pinpoint to you at the moment. Um, you can see that it's overextended. There's 4 primary failures at the moment, and it's really highly overextended. One of the first levels we're looking for it to break is 23,000. This low of this big bar here. That's what we are looking for. So that's something that you guys can look for as well. So even any counter trend move, you can start putting a strategy around it to take those moves until to this point of 23,040. Okay. All right. I guess that's pretty much that from me in terms of this analysis update. Just a quick recap. Then on the our performance. So the elite room, no trades, on the elite room, no trades. And on the LTR, what do we have? We have a 0.75% profit, which is closed, and we got 55 pips of profit over there. Okay, at 10 points a point, 10 pounds a point, that's 550 pounds of profit for the week. Okay, and in terms of Aussie dollar at the moment, we have a running profit of over £1,000. Okay, watch our earlier videos on that, and you can see what was the basis on taking those moves. Okay, of course you can learn more of all of this on Traders Basecamp, and also in our live trading evening. If you want to just get a flavor of how we analyze the markets live in person in Saxo Capital Markets, then of course you're more than welcome to join us. Okay, that's pretty much that from me, and as we always say, till next time, stay disciplined, follow your trading plan, and keep trading like a master.